In terms of the consumption side versus the tourism side, you're looking at getting around about 25% of your pre-COVID levels. So let's call that 10 million arrivals according to your tourism ministry. Is that going to be enough to offset the squeeze on consumption you're probably going to see because of a little bit of the withdrawal from fiscal accommodation plus the inflationary pressure to the upside?
I think as I said at the beginning, that once our economy recover gradually, I mean slowly, it doesn't matter whether it's slowly or quick or fast recovery. But on the part of the government, I think the need for the fiscal policies to stimulate the consumption, domestic consumption, is now less and less because for the last 2 years that we have borrowed 1.5 trillion Thai baht, which is big enough for the finance ministry. That accumulate our public debt to GDP rising from below is now 60% of the GDP, but still below that we have raised our ceiling of the public debt to 70% in order to make room for the government to borrow in the case of the emergency. So once the economy recover, this year we expect our foreign tourists to come to Thailand around 8 to 10 million, which is should be one fourth of our pre-COVID number of foreign tourists, which can bring the people back to work. Once they cut their salary fully or 50 or 60, 70%, it doesn't matter, but the purchasing power of the household has been increased. At the same time, the commodity price, particularly the cassava, the palm oil, oil palm, and the rubber, the price still very favorable for the farmer. So I think the purchasing power of the consumer as well as the people has been gradually picked up. So the role of the putting the money in the people's pocket, the well-known program is the 50-50 co-payment program. This should be the last phase of the giving the 50% of the daily consumption for the people. So I think let the market work, and the issue now is how to raise the income of the people.